is a really special day for me because what happens is you all think I do this for you, but I actually do it for me because isn't that the way best things are? But because I collect ideas and people all year round. And I'm always looking for interesting female speakers, obviously. And it's always in different areas, and I'll pick up things that interest me, and then we try to find a speaker in that particular area. So I definitely want to thank all the people that have helped. I'm not going to go through the list, but certainly UCSF always helps every year. And you'll be rotating from one room to the other as the day goes through. And I give you 10 minutes in between rooms because typically one of the wonderful things about this is supposed to be interactive. And people get to talk to each other and they make new friends. And sometimes businesses start and books get written. I mean, it's really cool. I love connecting people. That's what this is really all about. And very few people could have predicted the election of Trump. We all know that. The pundits were wrong, and so were the statisticians. And there was even a snarky meme posted on Facebook prior to the victory on November 8th because he was dismissed as unlikely to be elected. Quote, and you know this one, the meme said, "An idiot full of sound and fury signifying nothing." Yeah. And of course, that's a quote from Shakespeare's Macbeth, Act 5, Scene 5, but it's also the name of one of my favorite books, which is by William Faulkner, The Sound and the Fury. So I want you to keep that in mind. This day is about positivity. And one of the speakers, obviously, right before lunch, is how to survive under the Trump administration. So that's really what this day is about, is I want you to have takeaways that are going to be positive for you because there's too much noise out there and there's too much negativity, and really, guys, you can get bogged down, and I don't want to see anybody get bogged down because we're going to regenerate today. That's going to be the purpose of today. So, how do you recover after a fire or a cataclysm? Through what's called permaculture, insanity, new green roots, activism, replenishment are what we're looking for. The greatest glory of living lives is never falling, but in rising every time we fall, and that's by Nelson Mandela. So think about, this guy that was in prison for decades, rises from the ashes, comes in and changes the culture. And I always think about people like that because, believe it or not, everybody in this room's got the ability to be a change agent. In Kurzweil, the law of accelerating return states, the rate of change increases exponentially. It predicts such paradigm shifts that will continue to become increasingly common. So this is another writer who talks about momentum and change, but he's a scientist. He says, quote, "This increasing change leads to technological change. It's so rapid and profound, it represents a rupture in the fabric of human history." He believes in the law of accelerating returns, and it implies a technological singularity which will occur before the end of the 21st century around 2045. This guy wrote this back in the 80s. So be open, don't be closed, don't be scared of what is happening in our reality because it is change, and change can be terrifying. I mean, think about it. Back in the horse and buggy age, people were scared to death of horses, they were scared of buggies, then they were scared of cars. And so don't be one of those people that's scared. I think that's what the problem is. If we look at it on a global basis, people are just scared because they don't understand what's happening. As Yoko Ono says, a dream you dream alone is only a dream. A dream you dream together is reality. So I just want to say welcome to the brave new world we have the privilege to be living in. The seed of transformation is here in the Bay Area. Please enjoy this day of learning and positivity and share with other people in this room because, as you know, knowledge is power.
So it's a pleasure to be here today. I'm very excited to speak with all of you and to share the work that I've been doing for over 35 years with both men and women related to our consciousness. I'm going to be taking you through an inner journey through something called eidetic images. So this presentation will be both didactic, but I'll also have you experience things inside yourself, and hopefully you will find new things about yourself and powers and abilities that you have that you can bring to your life. So one of the things that I'm very, very interested in is how we have been socialized as women versus what is our true authentic nature that socialization covers over. I've been doing a lot of work at Google with women, and what I find at Google and other places is that women exist in the corporate world in kind of like two states. One is there's like this split consciousness that goes on where these are women attorneys and creatives and very brilliant women, but always what I see exists in their mind is this little feeling of insecurity and diminishment when dealing with men. What I find is a split state of consciousness in women. And I did programs for women at Google, and then I did individual coaching where I learned a lot, and I was shocked to see these vibrant, powerful women when they operate with men or have to go into meetings with men. They feel one down, a little inferior. Questions such as, if I'm too strong, I'll be seen as a bitch. If I don't speak up, I'll be diminished. And I don't know quite how to be myself. So the work that I did, which I will take you through today, will find for you, you will see the places within yourself where your socialization has limited you and the knee-jerk reactions you bring to every interaction you have. And I will do some techniques that'll move you to your authentic power. Does that sound like fun? Although I can see this is a group of very powerful women. What I found is that women at this time in history, we carry more light. So let me tell you why I'm saying this. There was an experiment done. I worked with a leading theoretician in the field of eidetic image psychology, consciousness psychology. And so he wanted to do an experiment, which was done at universities all over the world, studying if people were good imagers or bad imagers. These are images seen in the mind, which I will show you in a few minutes. And so what he did was he had people close their eyes and see an image of a sunrise or a sunset and rate it on a 1 to 5 scale, 1 being the most vivid and 5 being really vague. So why don't we try that? So if you close your eyes, and some of you will visually image with your eyes open better, but see an image of an apple. Can everybody see an image of an apple? So the research was if someone's a good imager or a bad imager. And that's a ridiculous question in imagery research, because what we did here is an experiment in this room, bringing your mother, which is a social context, how your mother impacted you in your mind, in your consciousness. Did she create more vividness or vagueness? And father in mind, it changed the vividness and vagueness. So when this was done with large populations of people, because this is a small sample in this room, it was found overall that mothers, the vividness in the imagery went way up, huge percentage points. And keeping father in mind, vagueness prevailed. And what that means is that the mothers right now are bringing more light into the abilities to think, to create things, into potentials in offspring. And the legacy of the fathers is diminishing our ability to see where we're going. I'm sure you all have those moments and these epiphanies when you're working on a project or something, you go, aha, you get this download. That's happening more through the feminine mind. So we were wondering, why is this happening? Why is it that more light is coming through the feminine line to offspring? And what we realized is that men, although much more empowered socially, have been raised in a way that diminishes their sensitivity by given messages such as don't cry, stiff upper lip, suck it up. And when you operationalize all of yourself in order to create a project or to do anything, you need to be able to have emotions and feelings and be very sensitive and subtle and operationalize and use all the ability within you. And what we realize is that in men, because of how they've been conditioned, and this is not all men. I have a son who's a poet and a writer. He's very sensitive, and he's more like women. So it's not all men. But that men, the way they've been conditioned has shut them down, and they're not able to pass as much giftedness or ability to see where we're going as women have. I gained a lot of compassion for men. And what I understood is that we as women have to bring our powers and our abilities to the fore. And it's really crucial because we can download more information. We have more emotion. We're freer inside, even though we don't have as much outer power. We haven't been as constricted as men have through socialization. So I'd like you to do one more thing, which is this time, think about somebody who really got who you are, who supported you, maybe mentored you, a grandparent, a friend, someone who you could really feel yourself with. And for some people, it's a spiritual figure, maybe Buddha, keeping Buddha in mind, or Jesus, Mary, somebody like that, a spiritual figure, or a person, or someone in history who really resonates with you. And I'd like you to keep that person in mind and notice how you cross the road, keeping that person in mind, a deity, a person, a relative. Because the person you choose has a resonance with your true self. Notice if there's a difference between mother, father, and this person and how you cross the road. Okay. And notice that when you keep mother in mind, father in mind, there's different feelings that you have of self and feelings in your body, which means that you're also downloading different chemicals from your brain. Stress chemicals, I feel uncared for chemicals, powerful chemicals. So at Google, I was working with a woman, and she kept going to her boss to give her permission to get a lot of things that she needed, such as going to China with him, so she could show face with the Chinese culture. She needed that, plus a lot of other things. And every time she went in, he said, no, no, no. So after this exercise, she said, I'm going to see if this really works. And she kept that mentor or that figure in mind. And she went in and he said yes to everything that she wanted. And that is because what happened inside her is her natural instinctive ways of operating under mother and father, which is our programming and what we carry. He read as a signal, because we're animals and we sense everything unconsciously in another person. Are you aware of that? We form opinions quickly about other people based on subtle signals we get from them. And whatever signal he was getting from her, he said no. But when she kept, I don't know who that was in mind, and she walked in, there was a sense of confidence in her body and a presence that he gave her everything. So you can use this image before going into any situation to put your best foot forward. And you can actually see in the image how the other person's going to relate to you. And I'll show you that now. So our conditioned responses from mother, that's our socialization. Our father is how we're socialized and how we operationalize in life. And the mentor, or whoever that person was, connects to a more authentic being. So let's look at a person that you're having a problem with at work, or you feel a little powerless with. Could be your husband, could be your child, or someone at work. Does everyone have someone like that? And the women who couldn't see images, are you seeing them better now? Okay, great. Are you a little better? Okay. All right, so picture a person that you're having a difficult time with. See an image in your mind of being with them. And this is what I'm finding in women that I work with at Google, the International Monetary Fund, the UN, various places, that women end up going to what the Dalai Lama is saying and these visionaries are saying. Compassion, mothering, caring, it's across the board. And actually it's really blowing my mind. Because I sit in rooms with powerful women, and what I really see is powerful healers. Because that's what's living inside of us, which is what the research was saying and what all these visionaries were saying. We can be the changer of the game by how we are and the shifts we make in interacting with others. And this is a deep, deep spiritual truth that who we are and what we carry impacts everyone around us. And as we change, the world out here changes. I have experienced this myself and with many people that I work with. People respond to you, and that's our ultimate power, that we're not victims, and we're really able, by changing ourselves, our attitude, our perception, we change the outside as well. So, thank you so much. I'll be around if you have any thoughts or questions. Thank you.
My division of Putnam is covering stock portfolios. We talk about these implications of what he's proposing every single day. Some of them are positive for the stock market, some of them are negative, and I think it's fair that we need to discuss all of those and what the implications are. So this is a chart in front of you of what the stock market has done basically since last summer. So you can see sort of this little dip right here. Everything sort of ahead of the election was kind of balanced. You know, Hillary was in most polls leading. Wasn't going to be much of a surprise. What the markets really don't like, they really could care less whether it's Democrat or Republican. What they don't like is change. Then you can see at the end of, well, it looks like the end of October, but that valley there is election day. If all of you remember watching the news on election night, you know, it started beginning, I'm on the West Coast, or I'm on the East Coast, so it was 11 o'clock my time, and they start talking about, oh my gosh, the markets are down 5 to 7%, you know, in the after-hour markets, and so clearly everybody started to go, oh no, he's going to win, and we don't know what he's going to do. That was the knee-jerk reaction, but what was funny is we came in the next day, we're at work, everybody sort of had some time to digest Trump's victory overnight, and then you can see what the markets did that day. They clearly recognize that Trump does have a pro-business agenda. The market has cheered a Trump victory. But you know, what we want to do is take pause and say, okay, why did they like that victory? Why does the market like that victory? And then what are some things that maybe aren't priced in that are some big risks to certain areas of the market? He wants jobs, he wants economic growth. So you're seeing that in these decisions being made, things like the EPA, the Trans-Canada Pipeline, the deregulation in coal now. These are all about, okay, yes, I admit that, he actually admits that there's climate change. He'll say, I'm aware of it, but you know, what I think is more important is jobs, and I'm just gonna, my policies are gonna favor jobs and the economy. So that is the number one agenda item. So what I'm gonna do in the presentation is go through each slide. It's gonna be focused on individual sectors, financials, consumer, industrials, talk about how these policies might impact that. If you kind of bring it back to economic growth at the expense of everything else, that's really how we approached each of the impacts for the sectors. The corporate tax reform is really important. The lower corporate tax rate has been floated out there, which would be great for companies. Obviously, that's going to improve their profitability, lower their tax bill. That's all good. The border adjusted tax. I'm not going to educate you on policies here, but it will shift the tax bill. So if you're an exporter, rather than the U.S. taxing you in states, they're going to let the jurisdiction where you're actually selling that product tax you. So if you manufacture in the U.S. but you sell into the U.K., they're going to let the U.K. tax you rather than us tax you doubly. That will be a benefit for them. What really hurts is if you are an importer. So this is really big, and I'll get to it on the retailers. You're getting your clothes that you're selling here, they're made in China. They're going to not allow you to deduct that cost of the production. And that's going to have a massive impact for the retailers, and I'll share some numbers with you. And I think this is what's really driving this market performance. It's his policy on deregulation. Definitely believes in smaller government, definitely believes in lower regulations across industries. Are you trying to talk to you? No. Oh, not loud enough? Okay. Definitely believes in lower regulation. This is going to drive a lot of activity, whether it's merger and acquisition activity. The financials is what I'm going to get to first, and that's why you see such good performance in financials, is this deregulation. And then the final consideration isn't necessarily a policy, but a lot of these policies, either if it's lower taxes, that costs money, that costs the government money. If it's infrastructure building, that costs the government money. Deregulation, it's going to cost the government money. These are all things that we have to find ways to pay, the government's going to have to find ways to pay for, and there are implications of certain sectors that we have to think about as pay-for sources. The financial sector versus the S&P 500 in the blue line, the financial sector in the green line. The financial sector since the election was up almost as much as 30%. Now it's up about 25. You see the recent dip in March. Clearly, the financials like the Trump victory. Number one reason is what I mentioned, deregulation. Dodd-Frank was basically the Obama administration's solution to the 2008 financial crisis. It requires capital reserves. It labels institutions as too big to fail. This is a systematically important financial institution. It labels them as too big to fail. It has a lot of, let's call it compliance requirements that are huge expenditures on the balance sheets of all these banks and financial institutions. Trump his preference would be to repeal this completely. What we've just seen right now is actually he did issue an executive order, but that's basically just to review it. So this is kind of where you go, okay, well, did the markets really reward the banks too much? So they got really wound up that the regulations are going to be so favorable for the bank to take those regulations off. What if he can't do that? What if it becomes such a fight, when we already saw the Affordable Care Act trying to repeal that? What if it becomes such a fight that that doesn't happen? Are you at risk with what financials have so far, how they've responded? We think at Putnam that, and we actually were involved in the trade to get up there, which has been a great, it's been great for our performance, but now we're a little cautious, saying, okay, maybe if he can't get all of this through, do we need to think about some negative repercussions there? The next slide, there's one more slide on financials, because this is the biggest story to talk about. Bank of America, for example, we put their regulatory expense from their compliance department is about $10 billion a year. So that's an enormous cost that the market is saying, if that even gets reduced even by half, then you've got an enormous impact to their profitability. So that's definitely obviously something positive. Rising rates, this is sort of a down impact, but Trump's administration wants higher rates. We've already seen the Federal Reserve responding with some higher rates over the past couple of sessions. This is good for the financial sector. They get to charge a higher spread on their deposits versus what they lend out. Consumer stocks. The biggest impact here is this border adjusted tax. It's actually very complex. It's not necessarily very well received. So I'm not going to say there's a huge probability that this gets through. And in fact, we've heard from some experts that say it might be too complex and too much of an ask. And so Trump might just get rid of all hopes for a border adjusted tax and then instead just go to a lower corporate tax rate. It'll be an easy win for him that way, and you don't have to fight with the complications of a border-adjusted tax. But as I mentioned, this will really hurt those companies that import their goods that they're going to be selling. So even if it's just a raw material input, if they're inputting the cotton that's going to be making the garment that they're going to be selling, that is going to be a huge hit to those types of companies. Again, the exporters, so if you make in America and then you sell externally, you're going to benefit. There's a lot of different complexities in this. The value of the dollar overseas actually has a huge impact on it as well. But keep this number in mind. Our estimates for the retail sector, so for literally retailers that we're all shopping in, a tax like this could impact their profits by 70 to 80%, a negative impact of 70 to 80%. So huge impact there. Even if they can't repeal Obamacare completely, one thing that I think will be hit is Medicaid. Mainly because it was expanded by so much with Obamacare. They're going to be looking actually to Medicaid as a pay-for. And actually, the repeal of Obamacare was going to be a big pay-for because Obamacare, in theory, costs the government so much money that let's repeal it, and that'll pay for all this other stuff that we want to spend money on. A lot of that's off the table now, but they need to get some of those pay-fors back. So Medicaid is probably back on the table, separate from an appeal of the Affordable Health Care Act. And then the second topic that really impacts the healthcare space, and it's a huge reason why you see that green line go down, is drug pricing. This has bipartisan support. This could be an easy win for the Trump administration to reach across the aisle to, specifically to the Democrats, and say, all right, let's go after drug pricing. We can get some regulation in there, limit drug price increases. This satisfies you, this satisfies me, and that could be a huge win for them across the table. This will hurt pharmaceutical companies, it'll hurt biotech companies. There are a handful that have sort of really abused the price increases, and they're going to be the most impacted. This is a little easier. From an investor's perspective, it's a little easier to work around. We are looking for companies that haven't benefited from price increases, they've benefited from volume increases. So you're addressing a growing population, or you've found the next great cancer drug. We look for that rather than those that have increased their sales or profitability by just raising prices. So it's a little bit of an easier workaround. And then the other workaround is, all right, if you're going to cure cancer, I'm going to invest in that drug, right? Regardless of what the government says, this is going to be a huge success. So we're looking for those innovation, utilization type solutions, and that's where we think the opportunity is in healthcare. So it's a little bit maybe not as broad of an impact. There are still some investment opportunities. The last topic to talk about, and I sort of started on financials where there's a big impact. Industrials has a huge impact from two perspectives. Number one is this protectionist agenda. So everything is defense. So it's the defense spending, and if you remember, he came out with his proposed budget, cut everything else, and then defense is up 2-3-fold. So obviously companies that are exposed to that type of spending from the government will improve or will benefit from that. So companies that, obviously defense contractors, it's not about just U.S. though. I mean, the U.S. starts doing this, and then what happens, all other overseas governments, it's global rearmament. And what's funny is we were talking about Raytheon as a local company in Boston. Raytheon sure is a defense contractor for the U.S., but they also build all the weapons for several of the Middle East countries, which I just don't understand. Defense and infrastructure spending, these are the big pay-fors. We have to find money to pay for these expenses. That's what you're going after with the bank tax, with potential Obamacare repeal. But infrastructure says to improve our bridges, our roads, our rails. We have to build the wall. So I think all of you could figure out what types of companies will do well from that. Steel contractors, cement contractors, Caterpillar, that has all the heavy machinery. That's pretty simple. We actually really like the railroads that they could benefit from this. They have to transport all that. But also, if the economy does grow, the railroads just do better because that's the most efficient and cost-effective way to transport goods across the country. So we'll see if anyone has questions, but thanks for your time anyways. Go ahead.
Energy sector, because it's my understanding, just what I've educated myself on in this last week, that there are way more jobs and new job potential in clean energy like solar than the old energy, the other ones you've mentioned. And I'm just curious what you see the potential is of growth in that sector as an investor.
So let's take out the Trump administration because they're obviously not in favor of it. I think the issue with them is they need jobs, they need them fast, and they need economic growth fast. The way to do that is pull off the regulations off the oil companies, right? The clean energy requires investment, it requires building, it's 10 years out. Yeah, there's going to be jobs there, but it's just not visible right now. So I think within the Trump administration, like I said, you're probably not going to see growth out of there. I don't think you're going to see them shut down. He isn't opposed to it. It's all about jobs on the oil side, and that's immediate. But you probably need a different administration for growth there. The funny thing is that if you, from an investment implication, I always get asked, well, how do I invest in clean energy? And what's crazy is sometimes the easiest way to get access to that is actually through like Exxon. It's crazy, but they're some of the biggest investors in those types of new developments or wind or something. And so to get at from an institutional perspective where we might be actually to invest our dollars, those are the types of companies that are doing it. So it's actually kind of a conflict, right? You need, for that growth to pick up again, you're going to need the administrative support because they're heavily reliant on government support for that. So I think you're kicked out a couple of years, probably, unfortunately.
What we're doing is we're having a conversation really about being able to make changes, not just with what you're doing, but how you're actually using your money. Because women are very powerful entities, and they're tied more to their values and their families, and they're becoming more and more effective in the markets, if you will. So if you think about your money, your resources, and your values, how does that really impact what you're doing? And is it circular? That's the question.
My name is Megan Moses, and thank you all for your time today. Thanks for having us. I'm with Eaton Vance, actually, and Eaton Vance is an investment management company based in Boston with history dating back to the 1920s. And I specifically work with financial advisors and their best and brightest clients to focus on solutions for usually tax mitigation, tax deferral, but also customized exposure to equity. And I do that particularly with our parametric strategies. Parametric is a subsidiary of Eaton Vance. Based in Seattle. Jennifer is with Parametric. We have history dating back to the late 1980s. We currently manage at Parametric about $190 billion in assets, 18 billion of which is socially responsible in some capacity. What's kind of unique about Parametric is that we consider ourselves investment engineers. So our approach in investing is rules-based, systematic in nature, and highly customizable. And that customization capability can come through a number of different facets. Most popularly, it's through socially responsible and ESG investing. And so we can tailor your equity portfolios to your specific views and values. Jennifer is a senior investment strategist at Parametric, specifically focusing on our ESG and SRI capabilities, what we like to call customized responsible investing. So she and I work together very closely when financial advisors and clients are looking to, again, incorporate their views and values into their investments, which is coming up more often. It's funny because Cerulli Associates did a study of advisors, and this was very recent, late last year, in which they surveyed financial advisor interest in socially responsible or impact investing. And 63% of advisors had little to no interest in responsible investing. Now, Morgan Stanley's Institute for Sustainable Investing conducted a similar survey of investors and found that 71% of investors were very interested in customized responsible investing. We love Morgan Stanley, obviously, but also US Trust ran a very similar survey and came up with similar results. When they surveyed females specifically, the number is even higher. Millennials, it's close to 80 to 90% interested in responsible investing. So obviously there's a disconnect here, right? And so I would encourage you to make sure that you're having conversations with your financial advisors to discuss really what matters to you and see if you can effectively create an impactful investment portfolio, because there's a lot more options available to you today than there ever have been before.
So I've been at Parametric for about 4 years, and I really came to Parametric to do a different kind of investing. So I had done classic sort of active equity research for about a decade prior. And I really wanted to do a different kind of investing at Parametric. And so really what I'm able to do at Parametric is be a partner and consult with clients to really build them a portfolio that meets their objectives instead of trying to, sell them my story, tell them the thing I think that they should do. So I work in what we call our research and strategy group, but again, I'm not doing individual security analysis. I'm really understanding how to implement very specific, customized portfolio, utilizing this sort of toolkit that we have at hand. So, in most cases, what I'm doing, or the kind of mandates that we're working with, is really a passive index-based kind of mandate. Not necessarily, but for the most part. And then what we have is a whole range, as Megan alluded to, a vast array of ESG, so environmental, social, or governance metrics that we purchase from best-in-class providers, and then we can integrate into a portfolio in a really flexible kind of manner. And at the end of the day, what we're really trying to do is get you that equity exposure that you're after. So do you want large cap US exposure? Do you want developed international? And you say, look, these are the characteristics of the companies that I think how companies should behave and act, and that's the kind of company I want in my portfolio. And we say, great, can we build you that? Can we build you this diversified exposure that really sort of lets you make sure that the companies that are in your portfolio align with how you think companies should behave in the world. So there's a growing awareness that within public equities, the power of the shareholder to really try to affect the way corporations conduct themselves is a very, very important tool. Now, it's very difficult as an individual shareholder to make that impact. Your share of the company is likely quite small. How closely can you actually follow the goings-on? You're not going to get a meeting with management. But I think there's growing awareness that with collective action, either by working with a manager who is sort of pooling these activities, at various investor networks, you can start to really shift the way that public corporations conduct themselves, and you do actually have some power to influence real change. And there are examples of that kind of change out there. I think the thing is, it's hard. Achieving this change takes a long time. It's a multi-year, intensive kind of process. So we have seen where certain shareholder resolutions come up at companies year after year after year after year, and then finally, the company will actually adopt some sort of change. So we've actually seen some shifts on climate. I would say with ExxonMobil, for example, just to point out some instances. For years, a lot of resistance there, but they did appoint a climate expert to the board just in 2017. They are advocating that the U.S. remain in the Paris Climate Accord. You've also seen, a lot of issues of great interest, for example, around diversity in general, but just, gender pay gap has also come up and been a very, very hot topic in the shareholder engagement community. And you are seeing companies actually really take action with regard to trying to close, for example, gender pay gap, and you're seeing that shareholders care and they're paying attention when that is not happening, and a whole host of other issues. So again, that's not easily done at the individual level, but I'd say, in addition to just talking to your financial advisor, letting them know that you care about these things, understanding how what's the shareholder engagement of my holdings is a great place to look, in addition to just what are the companies I own.
Along with this positivity that I've been talking about, looking at companies with higher gender diversity contributions, making sure that there's a return on equity that makes sense, so that you're actually doing the analysis behind what the cause and effect of something is. Now, the cool thing about Parametric is that you can have, they can design portfolios for these institutions that may have very strict guidelines of what they need. So it could be really crafted and designed to reflect what that value system is of that particular entity. And there's nobody else out there that I can think of that's doing that from the standpoint of being not only tax efficient, which is important, and so we call these active passive trading strategies. So yes, they do act like indexes, but you're harvesting along the way so that you're taking advantage of the tax system, basically, because you want to do that. You want to be neutral on your taxes ultimately. And then I won't get into all the other things because there's other things hanging out there from a standpoint of not all indexes are created equally. Margaret was talking about the sounds on outside the radio, or this not flattening the data. You need all the data, and so when you have a problem of trying to distill the information to make it quieter, it's almost like sound. You know, with recording devices we have now, you cannot hear, like on vinyl, the extreme sounds, extreme iterations. Those are the warning lights a lot of time. And if they flatten the information and they don't give it to you, or they're not processing it properly, you cannot see or hear what's coming. So I would say to you, this whole situation we went through politically, it's all connected from the standpoint that Brexit was a precursor. A lot of us actually felt this thing coming, even though statistically, and everything in the news and all the numbers didn't look like he cannot be mentioned would get elected. It was there. And if you look at, this is what I'm saying, you have to look at you have to close off the daily news that you see, the talking heads, and think about your own analysis and read stuff outside that are, find the information. It's all there on the internet.
So when you think about what's in your portfolio, a lot of the time what our clients are doing is they're setting very specific criteria for eligibility for investment. Now, historically, there's been a lot of focus on what kind of businesses are what kind of activities, business involvement is the term. That was alcohol and gambling and tobacco, and those are actually still very, very popular and of great interest to clients. But there's been a lot of movement toward more behavior-based kinds of metrics. So it's, things that a corporation could do differently and still maintain their business, right? They can emit different levels of carbon. They can make different decisions with regard to who is on the board of directors. They can have different attitudes toward the ratio of executive compensation to the average worker. So these are other kinds of growing issues that are now more easily thought about in a portfolio and measured. And I want to just do a little tangent here, back to some points about looking under the hood. Underlying all this sort of ESG world is armies of people digging through 10Ks and reading legal filings and talking to management. And so it's very interesting, even though, I now work in a very more sort of passive index-based world, it still puts me right back there to sort of my equity research days. And it takes a lot of human power to get all this information accessible to us in a way that can really be utilized effectively. So a lot of times we have clients who are very interested in issues or thinking about things, and that it's just not available in a comprehensive sort of manner. But there's a feedback loop here, right? As assets grow, as clients demand these things, we have entirely new data sets just pop up. So when I started really thinking about this in 2014, since then, fossil fuel reserves, carbon emissions, private prison involvement, a huge focus on gender diversity, LGBT issues, like data that just didn't exist 3 years ago to us is suddenly available. So just back to this theme of it's a feedback loop, and if you tell people you care, and those people tell us you care, and then we tell our data providers you care, it becomes possible. If we have the data, typically what we're doing is working with a client to sort of match that data to certain characteristics they want to see in their portfolio. It could be the kind of businesses that they're involved in, but it could also be the way they conduct themselves. And what's happening is then you're saying, okay, build me a portfolio only of companies that pass that criteria. And that's what we call a screen. And it's well known, it's familiar, it's analogous to a yield screen or a value stock kind of screen. It's very comfortable and familiar. There are more advanced sort of quantitative integration processes where you can say, okay, get as much of that as you can, but don't go full bore if it means I'm going to get a wildly different return experience from sort of an average benchmark. So that's a little more complicated process, but there, again, there's just a lot of avenues open, and hopefully, everyone's working with an advisor or manager who can really start to explain these things and keep these doors open. So I will say, Threo has really worked us hard. She really utilized our full capabilities in terms of specifying, okay, these are the companies I care about with regard to gender issues, these are the financial considerations I care about, I want to overweight these, I would like to get, you know, a general large mid-cap US exposure, and then I have value screens that I want to put on top of it that sort of sit outside this as, you know, fundamental norms. And so, you know, at the end of the day, you know, our toolkit and our capabilities really get expanded by that kind of custom work that we can leverage for other clients. So those are some comments on the portfolio side, but I do want to just comment again on the shareholder engagement side. You know, it's really knowing, you know, what's the policy, the proxy policy. So get documentation, sort of understand the policy. At Parametric, you know, we have a policy that you can just opt into, and you can have the fine print 70-page version if you want the details, or you can just get some summary information and run with it. But wherever your assets are, they're being voted. This is happening. You know, you have made a decision, whether you know it or not. You are supporting certain kind of votes at corporations. So the first thing is just to know what that policy was. You know, is this a check the box? Whatever director gets nominated, great, that's good, do it. Or were there certain considerations that went into it? So it's being done no matter what. If you have stocks in a collective vehicle, that collective vehicle is making that decision on your behalf. If you have stocks in a separately managed account, you have the power to choose a different way of voting. So I would just emphasize that it's being done no matter what.